Can tech keep rallying in the face of these major headwinds, or is the group handcuffed? So many options as to where to go. Guy, what do you say?
First of all, this is like a first.
This is
well, actually, this is
but it's pretty unusual.
But it's interesting that Billy Joel, great artist, and you play potentially his worst song.
I knew you were going to say.
And you're going to say to me, "Thank you."
Uptown Girl.
Excellent
That's
point
his wife.
by you. Terrible song.
His wife.
With that said, so can you still buy tech here? I think there's still some names you can buy. Absolutely. I think Facebook, if that's technology, will rally in earnings. I think Pete's been on Microsoft. I think that's fine. But let's look at Micron real quick, because I think that's sort of where this battle line is being drawn. That stock was a $32 stock on June 25th when they reported earnings. And the stock has rallied probably 30% since. But then you sort of break down the earnings. Guess what? Earnings were okay, weren't great. DRAM, 64% of revenue, was down 45% year over year. And NAND, which is the other 31% or so, down 26% year over year. Say to yourself this: revenues are declining in names like that. Is it being commoditized? Yes. People will point to valuation and say it's still compelling. I say, in a name like Micron, I think you got to start taking some money off the table. I think it's run too far too fast in a declining revenue cycle.
For the big tech names such as the FANG stocks, is growth in question with these stocks potentially under regulatory assault?
Well, I mean, listen, I think you want to look at MAGA, right? You want to look at the Microsoft, the Apple,
sorry, I said
the Amazon.
FANG.
No, but I think that's really the most important thing here, because I think that obviously there's a reason why Google is still 13% from its all-time highs, while we know that Microsoft makes new highs every day. We know that Amazon is within 1.5% or 2% of their all-time highs, and so they're kind of different stories. I mean, listen, if you're talking about mega cap tech, Guy just said he thinks Microsoft's okay. A stock like this, where it's so concentrated, there's so much positive sentiment into it, as valuation is getting very stretched, I don't think that's a name that you want to be into. I think July, as we get into earnings season, then we get closer to that Fed thing. Mel, you said it yourself, this much anticipated Fed rate cut. You know what I mean? Everything's anticipated at this point. I don't know how you buy anything on the news. I don't know if it's going to be good enough to buy stocks after the report in the next few weeks, or you buy the market because we're going to get a rate cut.
Well, I know we're having a tech conversation, but we need to have it in the context of today's market, which I think was about a yields conversation. So just more importantly, at a world where yields were going to seemingly zero, the backup in yields and some backup inflation might actually put more pause to the tech trade, I think, than even regulation. Otherwise, I don't think there's anything stopping tech. And if you look at actually the triple Qs, which to me are really representative of what we're talking about, that's mega cap tech. They've outperformed the S&P by almost 400 basis points since that June, the low that started in June. That's an environment where you've actually had, all about the Fed, and I don't see what changes here. Again, you're talking about reasonable valuations in Facebook, Google. You can't say that in Amazon. I can say that certainly in Apple. I think you have every reason why people would be running into big cap tech.
But when you take a look at valuations, and you're sort of thinking about the framework in which to value these stocks, do you also put in a question about their future growth depending on what comes out legislatively or from other countries in terms of taxes on revenues and things like that? I mean, those things are looming,
yes,
and they're unanswerable. So should there be a discount to the valuation?
I would argue there is a discount to the valuation already in there. And, when you talk about I agree with Tim that Google and Facebook, to me, are not super expensive. Microsoft, great company, they've been killing it. That is actually getting to be a little bit more expensive. So when you ask the question, is it okay to buy here? If you go home long, it's the same as buying it here. And I am long Facebook, I am long Alphabet, I am long Apple. And I think that today was, started off as Fed, but I think it's already priced in. I'm long, but I'm afraid of this market. I like that we're getting back to fundamentals. We're just starting earnings season. We're going to have a lot of new information in the next week or two. Or three. I think that to me is what I really care about the most. And then second to that is a trade deal. Fed's last.
I think when I look at these, I think Facebook still is a buy because of the growth rate that they've got right now. I think Google has gotten punished a little bit too much.
And in your view, that growth rate is not threatened by any of these looming
I'm not as concerned about
things,
it because I think that
handcuffs, for instance,
right,
on the ability to acquire another company potentially because they're viewed as too big already.
I think the companies that they have, and if they were forced into a position ever to split up, I think that would be an incredible deal for Facebook, really, when it was all said and done, because some of the parts would be huge, I think. But I think you also have to look at what some of these names. I mean, Microsoft, to your point, Karen, and I say this as a guy who's owned Microsoft for 5 years. I'm getting a little concerned. It's pushing towards 30 PE right now. So when I look at that one, Have I sold it? No. So to your point, I'm basically buying it today because I continue to own this stock.
Calls against it, or
and I do sell calls against it. I also have a call spread in there. But when they have a price target today of 150 that was put out in initiation, I look at some of that and I'm like, wow, we're really getting in front of ourselves a little bit right now. But Apple's still very cheap. It trades 12, 13 times. Cisco's still very cheap. So some of the old tech, I think, stands out to me. You look at fintech right now. Look at PayPal. Look at Visa. Look at MasterCard. They're all part of the XLK as well. Those are trading at 30-plus times earnings right now. Do they have enough growth really to support that? It makes you wonder, are we seeing certain areas where there's too much to the upside, too much excitement where they could pull back very easily?
Yeah, I just mentioned Facebook's really interesting to me because in early June, the stock went down 10% in 2 days when the FTC said that, well, I don't know if it's said, but it was reported that they were going to be looking at them and possibly opening up a case against them. It went from 180 to 160. And what has it done since then? It's rallied 25%. And when you think about that sort of move in a little more than a month, you start to say to yourself, wait, I think we're really discounting what the unanswerable questions might be. And I think it's really important to remember that last year, when they reported their Q2, this is Facebook, and they guided down for the second half of the year, expectations for earnings growth of 20% in 2019 went to zero, flat year over year, okay? And sales growth is still 24%. But who knows what the fines are going to be, how much they continue to need to have to spend here. And that is my only point. There's a lot of unanswerables. And when you have stocks rallying the way they have in such a short period of time, you don't want to be off sides, especially in front of an earnings event like we're going to get when they report on July 21st. We don't know what their guidance is going to be.
You're not, but that's the point, I think, which is why I think Facebook specifically can rally in earnings. And this is a conversation we've had now for a while. And I said it last night, said it for the last few weeks. I want to dislike Facebook for a myriad of reasons. But if you just look at what it did technically over the last couple of weeks, that flush down to 163 on huge volume, the subsequent rally leads me to believe, as much as I hate to say it, it probably pushes towards 218, which was the level we saw basically this time last year.